FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Financial Survival Network is brought to you today by Orin Resources, a junior exploration company with the appetite of a major. It's hot on the trail of the next globally significant discovery, creating enormous potential upside for you, the shareholder. Orin is one of the most aggressive exploration companies pursuing high-grade, scalable gold and copper deposits and has a premier 7-project portfolio, including its 2 flagships, Committee Bay in the Arctic and Sombrero in Peru. Orin's unparalleled technical team and highly experienced management has a history of success in advancing and monetizing exploration assets. No wonder Orin's been called one of the best in the junior exploration sector. Orin trades on the TSX and the NYSE under AUG. To learn more, go to orinresources.com. That's AURYN resources.com.
The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. It's 3/18/2019. Hope everyone had a great St. Paddy's Day. I'm not Irish, but I'm honorary Irish since I have an Irish first name. We were out there partying in West Palm Beach and Palm Beach last night. It was a blast. Got home late, so it's a good thing that I do this job where I can start at 11 o'clock in the morning because I needed all of my beauty sleep for sure. Hey, Will, how's your portfolio been doing? What are you thinking of precious metals? What about the cannabis stocks? And what about China and everything else that's going on in the world? Cryptos, are they going to make a comeback? Good question. Well, first, as always, if you got an opinion on any of these subjects, write to us. KL@kerrylutz.com. We answer all, we read all. Might not do it as quickly as we'd like, but we do get to everyone eventually. And somebody who I've known for a number of years, did an event with him. He was really outstanding, really knowledgeable, great speaker, and all around Renaissance, man. I'm talking about you, Jerry Robinson, followthemoney.com. And as always, welcome. So, Jerry, we're looking at gold, broke 1,300 again. It's up for the day. If memory serves me correct, it was up about $3 the last time I looked. What is the case for precious metals, for or against? Right now, I should say it's right at 13.05. And it's up about almost $3 the ounce. Silver's up 11 cents, 15.37. So what's the case for and against precious metals?
You bet. Well, definitely for. I'll say that up front. And yeah, as far as gold and silver, precious metals, I've been a permabull on this particular market, although I am a trend trader. So I have a core position in gold and silver that I'm just never going to sell. Well, I take that back. There probably is going to be a moment in the future where it will make sense to sell gold and silver, but that is going to be some time out into the future. And you can always build the case for taking the gold and silver ratio and then adjusting your holdings based upon how that ratio looks. So I don't want to say never sell, but what I do want to say is that I have long been a bull on the entire space, mainly because of the same reason that most other fundamental guys would be, and that is the outrageous amount of spending that the United States government is doing. The global economy, of course, is wildly over-leveraged. You and I both lived through the 2008 economic crisis. The same problems that were plaguing us prior to that crisis are now, more pronounced than ever. And we're talking specifically about that 4-letter word, and that's debt. So they can tell us that they've put in safeguards. The Fed can tell us that they've done this. We can hear from the Treasury Department that they're certainly well capitalizing the banks and making sure that they have plenty of reserves. But in the end, it all boils down to something called debt. And when you have too much of it and not enough income and too much outflow like we currently have, you're simply going to run out of suckers to sell your, to sell your wares to. And so in this case, we see gold certainly being a primary beneficiary of these poor monetary policies, poor economic policies, poor fiscal policies. President Trump just unveiled a $4.7 trillion spending plan for 2020. I mean, this is a bad joke on America. $4.7 trillion that he's going to be spending in 2020. Now, the fact that this budget is going to go through as is highly unlikely, but nevertheless, it shows us once again that it doesn't matter who you put in office. It does not matter who you put in office. They're going to spend like a drunken sailor because that's all Americans know how to do. The Chinese save and the Americans spend. It doesn't matter if they're R's or D's or L's or whatever you want to call them. They're going to spend lots of money. So $4.7 trillion. And how much money are we going to take in, Kerry? We're going to take in $3.6 trillion. So that means we're going to have a $1 trillion deficit, not only in 2020, but also 2021 and projected out to 2022. And then, of course, the government tells us that it's going to starting to become more fiscally responsible after that, like they always tell us. But we project our own analysis. We suggest that we're going to see $1 trillion deficits from now on. There's just simply no other way to finance the kind of spending that this government wants to spend, and it's just no other way. So that bodes well for gold. Now, technically speaking, and when you take a look at a chart of gold, you'll see that things got bullish back in December whenever the price of gold pierced above the 200-day moving average line. That's a really important metric for hedge funds. It's a really important metric for fund managers and for investors in general who are savvy to technical analysis. But the 200-day moving average was retaken after kind of failing at that area back in June. We took it in December, and since that time, we've been holding up fairly well. We still have tremendous overhead resistance at the 1350 all the way up to about the 1380 area. I think you'll see a lot of excitement generally in the gold space and the gold investing space if we are able to break out above that resistance, that ceiling, up to really about 1380. That's the key number that we're looking at, 1350 to 1380. We break out above that, I think you're going to see quite a bit of money flowing in to the space. There's quite a bit of money still on the sidelines. And by the way, central bank gold demand, which is quite ironic because the central banks are overall constantly telling us that paper is the only way forward. When you take a look at what they actually do with their money, central bank demand in 2018 was the highest since President Nixon closed the gold window, with net purchases reaching 651 tons. That was a 74% increase year over year. That's the second highest annual total on record. And meanwhile, the central banks are telling us that all is fine. We don't have, much in the way of problems going forward. Everything's manageable. So gold, we think, is going to break out. Now, the big question is when. Well, the very first thing that I would suggest is that 1350 to 1380 range has to be broken. So until that happens, I'm going to be holding my core position and looking to add. But when we break out above that area, Kerry, I'll be getting very aggressively bullish.
Yeah, and that's the magic number, that 1350. Some people say it's 1363. Let's just call it 1400 to be on the safe side, because I like whole number. Not so much that they mean anything in terms of cycles, but psychology, right?
Sure.
It's all about psychology, and those big numbers, round numbers, carry certain properties that
absolutely right.
1363 just doesn't have, and even 1350. But 1400 is meaningful. It's kind of like when you're watching the odometer go by on your car and you don't notice the miles, but just the other day, my car hit 40,000 miles and it was 4 and 4 zeros after it. And that I noticed. And one thing I noticed was on March 13th, it was February 13th at 2:13, gold hit $1,313, $1,313.13. And I don't think it was a Friday the 13th, but I thought that was an interesting formation. It probably means nothing, but it's interesting nonetheless.
Well, about that same time, Kerry, less than 3 months after they had wound up their last major round of monetary easing, the ECB announced it was going to launch new QE. And so that's really interesting that just less than a month ago, or actually just a handful of days ago, we actually had this issue where the ECB is talking about launching brand new stimulus, giving money out to banks. And the Fed, of course, meeting this week as well. And we don't expect them to start launching QE right this second, but we think it's on the cusp. And we know what happened last time the Fed launched QE to gold.
Yeah. Well, they've already said, it seems to be consensus now, no interest rates for 2019.
There you go. That's
so
right.
if you're not raising, then inevitably you're going to start cutting. It's just the way that it works with these guys. So, and they've got to bring down the interest expense to the U.S. Well, obviously something's got to give here, Jerry. You can't run up these debts indefinitely and not expect the system to react in some way, which it hasn't yet. But we know in all likelihood it's going to. Solutions, there won't be any until there's a crisis. It's just the way it works. So let's move on to cannabis stocks. So we've got legalization probably coming. I heard in New Jersey is going to be next. That's going to be big. And New York. And it's already legal in Massachusetts, but I don't think they've got dispensaries yet. Probably Connecticut. Probably Delaware, Maryland. Got to believe the East Coast is going to fall next, up to the south. Florida is just not quite ready to take that step yet, but I'm sure they will be. Texas will probably be among the last, Utah, but nonetheless, Alaska went legal. So if Alaska went legal, a thoroughly red state, because no blue person in their right mind, you can't get a suntan in Alaska. They just aren't going there. What do we see for the stocks here? Because look, the stuff doesn't grow on trees. It grows on vines, I guess, or stalks. So you can grow as much of the stuff as you need, pretty much. I mean, when they start plowing under the wheat fields to do cannabis, and we have a wheat shortage because they're growing too much cannabis, then we'll know, I guess, huh?
Well, let's keep that in mind, too. I mean, remember, this stuff does come out of the ground. So it really is, cannabis is really just a commodity. I mean, when we really boil it down. The thing about cannabis, though, is it has so many different uses, so many different use cases, and it also has so many different properties that you're going to have some very different kinds of applications. Whereas, maybe coffee is pretty straightforward. You drink a cup of coffee, what else are you going to do with it? But however, with cannabis, there's quite a few different applications in many different markets. And so I think it's a little different than a commodity in that respect, or a regular commodity. But when we look at the overall potential size of this market, we're talking, $200 billion, according to one research firm, Deloitte & Touche. We're talking about the total global medical and recreational cannabis use. Could be talking about $200 billion. Much of that growth is expected to come as legal cannabis disrupts the beverage industry. Coca-Cola is already looking at this space. Pepsi is too. The tobacco space, they're looking. They got declining revenues. Altria is already making bets in this particular space. And then you also have the big pharma industries. They're already getting involved. And then you have the alcohol space. I mean, Constellation Brands. You also have
Heineken,
Molson Coors getting involved with another company. So you have a lot of big money kind of lining up here. And then you also have new methods of ingestion. Most people think of the old,
Cheech and Chong.
Cheech and Chong.
Pass the bong. Pass the bong.
And then there's legal fears around that. There's social stigmas about that. In fact, when you go back and you really look at the root of these cannabis laws, you'll find out that people really weren't worried about your health. If they were worried about your health, they tried to get soda out of there was a new headline in Wall Street Journal this week says soda actually causes all these different cancers. Well, where are the moral guardians out here telling us that we shouldn't drink soda, right? Or even alcohol. Carrie, right now I can drive down to the local liquor store. You know what I can do? I can buy as much liquor as I want to. Did you know that? I can buy as much liquor as I want to. There is no limit. And then I could sit there outside on the sidewalk and drink myself to death, okay? And you know what? Nobody's going to care. There's no moral guardian that's going to come out and say, we got to shut down the liquor store, right? So I can literally kill myself with liquor, but I cannot grow a plant in my backyard that cannot do damage to me. Really quite staggering. And I think the new generation is rising up and they're saying, now wait, just a cotton picking minute. what's this all about? And you know what? It is about that cotton picking, because we go back and we take a look at Henry Anslinger, who was the first commissioner of the Federal Bureau of Narcotics
and Dangerous Drugs. Yes, correct.
And he tells us right before Congress, let me quote Mr. Henry Anslinger, the first commissioner of the Federal Bureau of Narcotics. He says marijuana is the most violence-causing drug in the history of mankind, because most marijuana smokers are Negroes, Hispanics, Filipinos, and entertainers. And he goes on. He's not done yet. He says reefer, which is the slang word for marijuana, makes the darkies think they're just as good as white men. So the primary reason Mr. Anslinger says we should outlaw marijuana, you ready for it? Not health, none of these other things, no morals, because of its effect upon the degenerate races.
Yeah.
Okay, these are racist laws. They certainly target minorities extremely harshly. And for individuals who see this, they realize what this is. They realize this is not about health. This is not about public health. We certainly don't want to see cannabis sold to children. I mean, I'm a Christian. I mean, I'll be quite frank with you. I'm a Christian. I believe the Bible. So I'm not chomping at the bit to see cannabis in children's hands. But what I am suggesting is that, if you're worried about morals, then worry about other things, because cannabis has killed no one up to this point. Therefore, I think you're going to see a mind shift and a sea shift here. And as that happens, there's going to be a lot of money made as we make this shift. And so we've positioned ourselves early. We've already put out a report on this. We've got several stocks that we are already well in. We told our members about. We like the space. We see this being a 5 to 10 year play, and that could provide massive gains if you're properly positioned.
Yeah, that's the big if. You need to be properly positioned. Hey, another reason why Anslinger was so gung-ho on banning reefer, and the movie Reefer Madness was from that era as well, was because prohibition was ending. You had all these government employees who were in the enforcement division enforcing the war on alcohol, and all of a sudden they had no jobs. They were going to have no jobs. So this was a way to keep the federal workforce working, if you want to call it working, doing unbelievable destruction to lives and property and society as a whole. But this was part of the plan.
Absolutely. And, when we take a look at cannabis itself, it sits on the FDA Schedule 1, which, associates it with things like heroin and LSD. I mean, I've known guys who've taken LSD. I know guys who's taken heroin. I tell you what, it's nothing similar at all to marijuana. So simply, if we don't get a descheduling of cannabis from the FDA, just a rescheduling. I mean, Schedule 2 on the FDA has stuff like crystal meth and PCP and cocaine. Yeah. I mean, you would expect at least marijuana could be lowered to that level. And a rescheduling would be massive, because it would allow research. It would allow a lot more to go on with this industry. So I think a rescheduling at the very least is going to happen by the 2020 election, and then possibly a descheduling, which would be the best of all worlds for investors.
Yeah, for sure. And it looks like it's going to happen. Trump is in favor of it. I think Congress is going to come along, because it's a revenue opportunity. I don't see the tax revenue as being a particularly compelling case. It's going to chip in way less than liquor. When I see what states have done with legalization, probably the best states are Colorado and Washington State. Business is booming, and it's a legitimate part of the economy. I'd say Nevada shortly thereafter. The worst job by far is the People's Republic of California, which legalizing 38 million people in the state where it's going to revolutionize the market, and they've so overtaxed it and overregulated it and really botched everything, which is what you expect in blue states. They've really taken literally the gold watch and turned it into horse manure. You know?
That's true. But remember, California really is the trendsetter in everything. Whatever happens out there tends to make it out to the middle states, 10, 20 years later. And I think it's the same case with cannabis. Right now, there's hardly any kind of brand awareness, let alone brand loyalty in the space. I think 10 years from now, Kerry, many of us will have brands that we think are the best. I mean, we can certainly walk into a liquor store and you kind of have some snobbery with the wines, you have snobbery
cognac,
with the beers. People say, oh, yeah, I like this particular, I like Heineken, or I like Coors, or I like Budweiser, or I like, whatever, and because we've been told what to like. And I think that has not yet happened with cannabis. Therefore, the savvy investor who can identify those brands early, I think they're coming out of California too, and certainly out of Canada, which has a huge head start, by the way, because of our backward laws here in the United States. Canada has a huge head start. Many of the cannabis plays.
Yeah, no pun intended, but yeah.
We've been focused upon the Canadian plays. They've been locking up markets overseas. They're locking up Europe. They're locking up Asia. They're locking up South America. Meanwhile, the United States has still got it scheduled like heroin and LSD. Really quite stunning.
Yeah, quite backward and really just out of touch with reality. But old laws, Jerry, old laws die hard.
They die hard.
And this is a perfect example of such. And we're just going to have to see. But the trend is the trend. The trend is fully underway. And as a practical matter, it's impossible to legalize it in one state, or in a bunch of states. We're up to 10 now. Michigan legalized last election. It's impossible to legalize it in 10 states and not legalize it effectively throughout the country, because the whole dynamics of distribution have been stood on their head. Now people buy in one state and they ship it off to another. You've got a lot more intrastate smuggling or interstate smuggling than international smuggling. And the whole market has changed totally. Hey, so cryptos, I predicted back in December of 2017 that Bitcoin was going to crash.
Nice.
I knew it was going to. Got rid of mine. And that, unfortunately, it was at 15,000 when I made that call. And now, it's struggling to hit 4,000. My prediction is before it ever goes up again, and I don't believe that it's going to, not Bitcoin, I think there's a new generation of cryptos coming that will be far more robust, less subject to manipulation, and less subject to blockage, which Bitcoin is. Whether anyone likes it or not, I don't care. But, it's going to go to 2,000, and, what it does from there, I don't know. But I'm not real bullish on Bitcoin itself, although I am bullish on the future of cryptos when 2.0 comes out, which probably they're working on it now. Probably won't be long.
Yeah, I mean, I think maybe we have a slight difference of opinion there. I think Bitcoin will inevitably still be around and probably do very, very well in the next bull run. If you take a look at the pattern here with cryptocurrency, the history, in 2013, you had a massive bull market that began in cryptocurrencies. That's when I noticed the space. I was tipped off by a fellow, the guy who was at your summit that I was there with, also Trace Mayer. Yeah. So he was telling me behind the scenes, hey, you got to buy this back in 2012. So I started getting in dollar costing, averaging into cryptos back then. And, and it was a big, massive bull run. And then a market crash in 2014. Everybody got burned. Everybody, decided to throw in the towel, except for the hodlers. And then we had the similar pattern play out in 2017, massive crypto bull market, and then it smashed to pieces in 2018, big 80%, wiping off of the values of these prices. I don't know when the next bull market is in cryptos. I think it's a boom bust market for sure. And
Agreed.
I think when the speculators are ready to drive it back up, they will. And that's exactly what happened the last few times. I think it's a similar market to some other markets as well in that respect. So I think you're going to see more boom bust cycles in it. I think you'll have price distortions for sure. I agree with you that their prices are not always accurate. They're probably going to be overpriced many times and underpriced other times. But I think overall what cryptocurrencies represent is the blockchain, and the blockchain is the fundamental change in technology. I mean, we've seen this over and over and over again. You know, I remember the president of Western Union back in 1876 saying this telephone has too many shortcomings to be seriously considered as a means of communication. Ken Olson back in 1977 says there's no reason why anyone would want a computer in their homes. The inventor of the Ethernet back in 1995 predicted that the internet would soon, spectacularly supernova and catastrophically collapse. And even Joseph Stiglitz, the famous Nobel laureate economist, last year said that Bitcoin should be outlawed because it doesn't serve any social function. I see this as a time of accumulation. I believe there's another massive buying wave on the horizon. And my own approach to this has simply been to strategize, which means I'm deciding what I want to invest in. I'm doing my due diligence. I'm investigating. I've certainly taken more positions in some of these newer altcoins you're talking about. I'm attracted by the risk reward potential on some of these. Secondly, I execute. I go out and I buy them. And I like to buy them in times like this where you have a general malaise and everybody hates cryptos. And then thirdly, I'm being patient. So I think that patience is going to win the day here with cryptos. We're so early on the curve. And even though we've had these spectacular bull markets and then busts, I think the biggest bull markets for cryptos still lies ahead. And I think that's because the world still fully doesn't understand what this really represents, what the fundamental changes that are going to be emerging out of this technology. So we like Bitcoin. We've been in Bitcoin, since 2013, Ethereum and Ripple, Litecoin. One of the ones that we got into at a really great time was just after it was released was Tron. That was one that came out. And it's now in the top 15 or so. It's really dominating Asia. We got into that one whenever it was, a fifth of a penny or whatever it was, trading for something absurd. Now it went up to like 25 cents in 2018, but it's come back down. I think it's trading around 2 or 3 cents. We like Tron. There's several other coins like that we tell our members about that we're currently invested in. I see, again, another boom coming. I think now is the time to be accumulating very prudently, very cautiously, doing your due diligence, not buying because somebody says, but instead recognizing that, hey, if I want to spend a little bit of time on this, I could really benefit and profit from the next boom.
Yeah, well, you could be right. My concern about Bitcoin is technological and security limitations. There's only 7,000 Bitcoin nodes in the world, and a large chunk of them are in China. If the Chinese decide they don't like this market, do you think any of those nodes that are left in China will be left standing? It's too hard to anonymize your nodes. With the government surveillance that's going on, they can track Bitcoin traffic and neutralize those nodes, either physically send in a team to knock it over, or with various malware, etc. There's a thing called eclipsing the node, where it's basically a DOS, denial of service attack. It's been documented. It can be done. It doesn't do you any good to do one of them, but if you can physically take out any number of nodes and then maliciously disable the rest, guess what? All you got to do is do it for 2 days, and that cryptocurrency will cease to exist because all confidence will be lost. That's my concern about it. Look, Jerry, you know as well as I know, we started out this discussion talking about deficits, and how do they cure deficits? They print money. And what's the greatest threat to a sovereign? What is the greatest power that a sovereign country has? Is the ability to print money. And any threat to that, when it's finally perceived as such, if it isn't already, is going to be met with the iron fist of government. So I don't see it as being as foolproof as everyone claims it has. And it relies on a network, a functioning network. So we'll see who's right or wrong over time. My feeling is it's going to go down another 2,000 to 2,000, because originally I predicted 3880. That was the resistance point. And when it broke that late last year, and it went down to 3,200. Seemed to me that the resistance for going lower wasn't there, and there was no resistance, and it's going to go lower before it goes higher. But hey, we'll see what happens. But I do agree with you about the future of cryptos. But unfortunately, I believe it's going to be the next generation of cryptos that become dominant, not this one. And nobody, unfortunately, knows what that next generation is. So anyways, finally, we got a minute or two, and one topic you wanted to brush upon was China. So what's the deal with China? Where is the Chinese economy heading? And are they going to take over the world?
China's been the largest economy in the world for a very, very long time, and that only changed back in the 1800s. So there was a period of time, even at the height of the British Empire, if you take a look at total GDP in China, and even India for that matter, you'll find that even at the greatest point of the West during colonization and whatnot, China still had a larger overall GDP, as did India, especially when you combine them together. So the East is really where the future is. And many people in the West don't understand that. They haven't been over to Asia. They haven't seen it with their own eyes. They don't understand what's happening. And so they're living in this bubble where they hear the Washington talking points and a propaganda every single day. China bad, U.S. good, China communist, United States not, capitalist, which is a big joke. The U.S.-China trade deal has been delayed at least until April. And so that's given a little bit of breathing room here. But some of the obvious things that we can see here is that if you look at China on a GDP PPP basis, just on purchasing power, you'll find out they're the largest economy in the world today. In fact, that's been that way for the last 5 years. So China is actually the largest economy in the world if you take away the silly nominal GDP and you actually focus on real purchasing power. The United States knows this. The United States woke up to this threat late. And so now you see that the United States, especially Trump realizes this, Obama realized this with his pivot to Asia. They're desperately trying to get ahead of the curve, and they can't. You see this with the 5G technology right now, where you have, the U.S. threatening its own allies if they work with China. Because why? Because China might spy through the 5G technology. You got to be kidding. I mean, Washington is the number one spy in the whole world. So it's like, throwing stones with a glass house. So the idea here that the United States is going to be able to compete with China 5, 10, 20 years down the road is nonsense. We believe that China is going to dominate, not necessarily straight up. If you remember, United States had a Great Depression back in 1929. By 1944, it was the total largest economy in the whole world. But by the way, the 40s were the peak for the United States. I mean, that was the height. We have never been higher since that time on a total global GDP. And so China may go through a Great Depression. People talk about the empty cities. They talk about the empty buildings, whatever. I mean, we may actually move into a place where we see a total breakdown of China. Fine. I'll be buying that moment. That'll be China's Great Depression. But I still believe that over time, China is going to certainly become more Americans will be more aware of what China represents. I think we're still behind the curve now. And I think by the year 2050, 2060, that India will actually surpass China. Yeah. And I think you'll see India being the major player, kind of taking the crown later on. So we're living in the 21st century, which I believe is the Chinese century, without any shadow of a doubt in my mind. And that toward the end of this century, India is actually going to be be taking the crown from China.
Yeah, well, it's a little worrisome to think that China being the dominant power in the world, because there's nothing in the Chinese system that really exalts the individual, elevates the individual. It's all about the state, and it's all about, the empire, effectively. And I won't say that the U.S. is much different at this point in time.
The U.S. is all about the corporation, basically. The corporation is the top entity.
Of course, but there's still the aspirations of many of us, you, I know, and myself, that to reassert the right of the individual, to make the individual supreme, and all the other institutions of society serve the individual to protect him or her and the free market, etc. We still share those aspirations. The Chinese, the other systems out there don't. And Western civilization was kind of founded on that ability to evolve as an individual to the most you can be, at least in theory. I mean, that's the philosophy. So that's what worries me about seeing a country like China, because I've been there before, and it seems pretty joyless there to an outsider. Not that there aren't plenty of places in the U.S. that are joyless. But
I mean, but Kerry, I mean, we're the ones popping pills and killing ourselves. I mean, we're the most unhappy, one of the most unhappy nations on the planet, and we think we have everything.
It's not that we're the most unhappy. It's like we look for these externalities to take away our unhappiness, and I think that most other people in the world, like basically mental illness and personality stuff, disorders, I think it's just a form of decadence that we gotten to this point that this is what we worry about, because we don't have to worry about feeding ourselves anymore, don't have to worry about making money because the government will take care of you. So the only thing you have left to think about is your misery and how to get rid of it. And that's the way I see it there. But I'm not saying that our system is perfect or superior. It's just that it's individually centric. And that's where I see the failings of maybe India is more like that. But China, it's never about the individual in China. And that's my main concern about the whole thing, about their rise. But I agree with most of what you're saying. The only thing I will say is, like Yogi Berra is often credited with saying, and I'm not sure that he did, prediction is very tough, especially about the future. So,
that's Mark Twain, actually.
Mark Twain, but then it got credited to Yogi. But anyways, hey,
no doubt about that. And I think all the prognostications we can live or live without. I think ultimately, when it all boils down, all you can trust is price and volume, and that's why I'm a trend trader. That's correct. Why I focus right on the charts. But of course, we can always. It's fun to prognosticate. It's fun to look out, like you say. But you're right. I mean, who knows in the end?
Who knows in the end? But trend in motion stays in motion until it stops.
That's right.
The problem is most people can't figure out when it's stopping, and then you get killed in the process. Anyway, Jerry, followthemoney.com. What else do we need to know about what's going on in the site?
Sure, no problem. Well, as far as people coming to the site, you go there. We have, you can go to followthemoney.com and you can enter your email address, and we'll send you automatically our top 10 trading rules. I'll give you an hour-long teaching for free that I did on the world's top traders. So if you're interested at all in trading for profit, trend trading, if you like the topics of cannabis or China or cryptos, we have reports on those topics. We do a podcast that you can get for free, and we have different memberships. You can become a member of our community. We have a growing, vibrant community. We put out trading alerts in real time on our private Twitter page. So you can find out all that information right there at followthemoney.com. And it's been a pleasure being on your program, Kerry. I really appreciate it.
Always good to have you on. We'll have you on again real soon. Any questions, comments, email us, kl@kerrylutz.com, Twitter feed @KerryLutz, if anybody uses that thing anymore. Facebook, pretty soon that'll be gone. So just if you're listening to the podcast or you're watching it on YouTube, please subscribe, like, and share. Really helps me a lot when you do that. Helps get the message out, like what you just heard from Jerry Robinson about what's really happening in the economy, not what the state-run media tells you is happening. And that is about the most important thing, to really get some kind of sense of what is going on, because then you can plan and hopefully get through whatever changes are coming intact or perhaps better than ever. Jerry, we'll talk to you again real soon. Thanks so much.
Thank you, Kerry, for having me on.
The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. Today is March 18th, 2019. Well, we just came back from PDAC and interesting developments, very interesting developments in the industry, not all good for certain. We're going to get a good insight into what's happening very soon. But our good friend from Junior Miner Junkie, that's a miner with an E, David Erfie is with us now. And David, welcome as always. So we got some interesting developments in the junior sector, particularly the GDXJ and to some extent the GDX as well. What is going on here?
Yeah, it's interesting with what's going on with these big mergers. The mining industry trying to bring more generalist investor interest into the sector by creating these big mining companies. So now that Newmont and Barrick have kind of made friends and they've made this deal in Nevada, it looks like the Newmont Goldcorp merger will go through here in April. And I'm concerned a little about whatever Goldcorp has invested in, Newmont might divest because that's really not their model, the strategic investment model. They've already pulled out of that deal they made in the Yukon, and Goldcorp has made a lot of strategic investments in not only some development plays, but some early stage juniors as well. So that's kind of a worry as far as whatever Goldcorp has strategically invested in might get diverted. And also you've got the GDXJ. There was a strong rumor that they would be divesting all non-cash flowing entities from that index. So you recall back in June of 2017, they radically changed the fund when they brought in mid-tiers and majors for more liquidity for the fund. And if this happens, as a matter of fact, Joe Mazumdar even brought it up as possibly happening in his presentation at PDAC. If this happens, then the GDXJ will no longer have any juniors in it. They have very few now, and pretty much all they'll have is mid-tiers and majors, while the GDX has majors and royalty companies. So there really won't be a major index fund with juniors in it any longer.
Mm-hmm. So what does that mean for the junior sector? How does a company ever progress to greatness if the markets are totally tilted against you?
Well, I think it happens with M&A. I think you're going to see a lot more M&A. You're probably going to see some mid-tiers be created out of this divestment of Newmont entities. And Barrick has already said they were going to divest. I think it was $14 billion worth of assets. Don't quote me on that. I heard that number bandied about from a few sources. I think you're going to see a lot more consolidation in the sector. Interesting. So maybe a new company is going to be born out of the ashes, the leftovers of Goldcorp and all of these things that get divested. Any companies you see or can think of in particular who are poised to pick up the valuable pieces, the ones that are the most promising? Well, there are a few companies that I really like in the space that one of my favorite subsectors in the space right now is sub 500 million market cap growth oriented producers who are on the path to becoming mid tiers. One that I really like that I've talked about before is Teranga Gold. They have their flagship project in Senegal, Sabodala mine, is got a lot of reserves, and but basically what they did was they took over a Burkina Faso entity, and they have two really good projects in Burkina Faso. One's about that is fully funded to production, and it will be producing, I think, in Q4 of this year. It's ahead of schedule and it's under budget, I believe. And when I had a meeting with management at PDAC, we discussed them possibly looking into a U.S. big board listing. So that is a company that might pick up another project as well, although they told me they weren't looking right now because they're focused on what they have already. But that is one to watch as far as really being undervalued here at this level.
Yeah, you got to believe that some of these projects that Goldcorp has, a lot of them are marginal, but there's probably some gems thrown in there that they just don't really understand or know about. Right.
Exactly. Yeah, it's really going to be interesting how this is all going to play out because as you well know, Kerry, there's a lot of companies in the space that really should go away.
Yes.
There's a lot of there's a lot of chaff out there amongst all the wheat kernels in the sector. So we really didn't lose that much during the last bear market. Most of these companies are still hanging around. So it's going to be interesting how this is all going to play out here.
Yes, for sure. And so what is the purpose of GDX and GDXJ now? I'm not sure. There's no real differentiation between them anymore, is there?
Yeah, I mean, just the differentiation that I mentioned. Basically, GDXJ being a mid-tier and a major ETF, and the GDX being a major and a royalty ETF.
Mm-hmm.
So, yeah, I think the J should be changed to an M.
Yeah.
GDXM.
Yeah, I agree. Hey, well, we're doing a online live investor summit for our client Sandstorm coming up tomorrow, actually. So I'm sure they'll be on the new GDXM or whatever you want to call it, right? They're probably going to be on there.
Well, they're more of a royalty and streaming company, but I mean, I'm not sure if they're in either of those indexes now already, but that's probably that would probably be one for the GDXJ. Yeah,
it would sound like it would be appropriate for them for sure. So what other trends we seeing, like noteworthy developments at PDAC?
Well, the trend that I noticed when I got back from, I wasn't able to really pay much attention to what was going on in the markets while I was at PDAC, because I know you went there for the first time and you saw how crazy it can be.
Yeah. Yes.
But the trend of global stimulus from all these central banks, the growth is slowing, and we've got the ECB announcing more stimulus. With what's going on there, I don't see them raising rates anytime soon, if at all, before the entire eurozone may eventually collapse. And the Japanese central bank, they announced pretty much the same thing, that they've been stimulating for years now, and the global slowdown in growth around the world has got the Federal Reserve doing the same thing. They're pretty much the FOMC meeting. It's coming up here on Wednesday. I think the pause is already priced in, and what they announce as far as what they're going to do going forward is going to be paid attention to more closely. And I think the odds have risen to over 20% that they may even cut in December.
Really?
Yes. So this is all good for gold. I think there's really good support at 1280 in the gold price, and if gold does eventually lose 1280, I think the strongest support is at 1250. I don't see that happening now with what's going on here, but the gold market, it loves to be fickle.
Yes.
So,
yes. who's ever turning the dials, like, doesn't care about what we think, right?
Exactly. But the GDXJ is still positively diverting from gold. It's in an uptrend. The GDX to gold ratio is trending upwards from that low hit. Ironically, on September 11th in 2018, I thought that was very ironic for a possible major low on the index. So we see that if we continue to see that trend up, if that trend's not broken, it looks good for the mining shares. Although this recovery has been slow.
Well, we did see the golden cross, right? The 50-day crossing the 200-day moving average. And, that isn't dispositive, but all these things that we see tend to improve the case for gold.
Right. Exactly. Yeah. I mean, and I don't have to tell you, Kerry, about all the things that are going on in the world that we were discussing before we turned the record button on here. So there's a lot of things that I think will keep gold above $1,250 an ounce.
Yeah.
I don't see it going any lower than that.
Well, it got nailed. It was like getting close to the 1350 to 1380 range. It got slammed yet again, but the way it was slammed is just really different than usual, because it went down under 1300 and then it rebounded over 1300. Haven't had a chance to look at the price, but I will look at it in a moment. But it was up a couple bucks today. They were but last night it was down $3.50. It's down 90 cents now. And a lot of it's got to do with Fed week, right?
Oh, yeah. You're not going to see much action until Wednesday at 2 p.m. Eastern time.
Yeah.
When he comes out and when the wizard comes out and tell us what he has to tell us what he sees in his crystal ball. So, it's consolidating those gains. Kerry, we had, that move was I think 4 months in a row, and it had a 15% move. Those gains need to be consolidated. Tell you the truth, I would be a little worried if it kept going without a correction. Then the inevitable correction that would follow would be a lot stronger. So I think it's healthy to see consolidation here below that 1350 area, and I think it's just building up more fuel to go higher.
Mm-hmm. Interesting. So I tend to think you're right. The market appears to be behaving quite differently than it was just a short while ago. Upside reversals during the day, it hadn't happened in years. A lot of different types of patterns seem to be trying to assert themselves, and we're just going to have to see what happens here. So was there any company or any development at PDAC that really surprised the heck out of you that you totally weren't ready for?
FSN Radio. It's all about what's next.
Egypt is on the verge, once again, becoming a world-renowned gold producer. The Golden Age is being rediscovered. For millennia, ancient Egyptian kingdoms prospered from unparalleled riches. Pharaohs built their empires and flaunted their abundant wealth that was made possible by the country's resource-rich gold deposits. Despite this rich history, modern Egypt remains one of the most underdeveloped gold mining countries in the world. Aton Resources is at the center of the modern Egyptian mining world, diligently working both as the only public exploration company in Egypt today and as the advocate for mining reform with the Egyptian government. However, those that arrive early like Aton will reap the best rewards. Aton's discovery of the legendary Lost Mountain of Gold at Rodruin and its current aggressive drilling program there could potentially reap those rewards. Aton Resources is focused on its 100% owned Abu Marawat concession in the Arabian-Nubian Shield, located 200 kilometers north of Centamin Sakari's world-class gold mine. Aton possesses first-mover advantage in the under-followed jurisdiction of Egypt, which is currently undergoing mining reform. To stay on top of Aton's latest drill results and news, go to atonresources.com. Aton trades on the Toronto Venture Exchange under the ticker AAN and on the OTC under the ticker ANLBF.
The Financial Survival Network. It's all about what's next.
my biggest goal at PDAC is to catch up on all the companies that I'm invested in for my subscribers, and to hopefully see a few more. I really didn't see anything that I liked that I didn't know about, but there was a company that I met with that is one of my favorite exploration plays right now, and they're about to have some results coming out very soon in the Puno region of Peru, which is one of my favorite jurisdictions right now. They're called Miramont Resources.
Oh, right. Yes.
And it took them a while to get their drill permits for their Cerro Hermoso project, but the meeting I had with Bill Pincus, the CEO, was very good. He was very happy about how the drill program went. He said it was the smoothest drill program he's ever been associated with. It came in under budget. He budgeted $180 per meter. It came in at $130.
Wow.
It's the project is 1 kilometer off the road. And although he couldn't divulge anything as far as how the results went, because the assays aren't out yet, he seems to think that the drill program went pretty well. And looking at the share price since PDAC, I think the market is expecting some good drill results. So we'll find out about that in about a week or two.
Yeah. Well, that sounds pretty interesting, and I've heard of that company before. Anything else that was noteworthy at the show?
Sure. I could tell you about another company that I really like right now. They're a developer explorer, and they're on the Cadillac Fault in Quebec, and they have a few projects. They're an interesting company. They're called Monarch Gold, and they have a producing mine that they purchased from Richmont when Alamos took them over, and they have a few projects that they're developing. One is a brownfield project, a Connor Gold project, and Wasamac is another project that they just put out a feasibility study on. That's a very interesting project. And they also have a few mills, and one that they have cash flowing. So basically the cash flowing mill and the cash flow that they're generating out of their production at their Balfour mine is covering all their expenses. So they have $9 million in cash, and the market cap is really low. And they just the market cap's around 60 million, something like that. And they just went over to the TSE, so they have a listing on the Toronto Exchange. So that's a company to watch. I think they have some exciting things in the pipeline that might come to fruition here pretty soon.
Wow. Yeah, you never know what you're going to find at PDAC, right? Besides cold weather.
Right. And full disclosure, I am a shareholder of Miramont and Monarch Gold, and I cover them in my newsletter.
Okay. Hey, that's fair. I don't own either, and I'll always mention, if people mention companies, whether I own shares or not. I don't own a lot of shares in a lot of companies, but enough that I will always disclose it, and in the interest of transparency, and just to know that I don't intend to buy these stocks prior to you hearing about them, just so you know. That's the way we work it here. I'm not out to front run the audience ever. So, yeah, I have a feeling it's going to be a lot different at PDAC next March if what you're talking about really comes to fruition. I think we might see another major emerge from the ashes, from the tailings heap of Newmont, of Goldcorp, and of Barrick. I think there's going to be a fund that comes together, probably well-known names, puts together a lot of money, and picks the cream of the crop off of there, and you'll see a new, if not major, then a large-scale mid-tier that will quickly, or could quickly, if those projects get developed, turn into a major. Just my feeling here.
Right. I would tend to agree with you, Kerry. Yeah, that's not a crazy assumption.
Yeah, because when they decide what to get rid of, it's not necessarily that the ore isn't good, the grade isn't good, or whatever. They have their economic and political reasons and managerial reasons. Like you said, if they're not into the Yukon, then they want out of there. And it could be a perfectly good project with good near-term potential, because so much of that land there is permitted already. And they just don't want to devote the managerial expertise and get distracted from what they consider their core projects. And other companies say,
Yukon is concerned, it's a fabulous jurisdiction to work in. You know, you've got the First Nations on board, you got the governments on board,
everybody.
But the lot structure and the seasonality, it takes a little longer for things to play out there. So some of these majors may not want to invest the time and the energy to do that.
Yeah, well, I think that we're going to see an uprooting of the industry, and it's not going to look like what it is now. These trends are too strong. Price has been down for too many years. Like you said, a lot of junky companies are still around that need to be disposed of. They need to be, have a hole dug and buried, but that'll come in its time. The market's good at that. Anyways, we are done here, David. So check out David's site, and it's Junior Miner, MINER, Junkie, JUNKY.com. It's definitely worth reading. You get some great ideas there. You can subscribe and drop us a line if anything resonated with you to kl@kerrylutz.com, Twitter feed @KerryLutz, Facebook page Financial Survival Network. If you are on YouTube or on a podcast channel, we urge you to please like, share, and subscribe. Really helps me a lot when you do that. Helps get the message out. You know, you just can't find this info on the mainstream media. They don't care about this stuff. They don't want to care about it. And they don't care whether you care about it or not. So, David, we'll see you again soon. As always, thanks for coming on.
Thank you, Kerry. Always great to talk to you.
The Financial Survival Network. It's all about what's next.
Financial Survival Network is brought to you today by Orin Resources, a junior exploration company with the appetite of a major. It's hot on the trail of the next globally significant discovery, creating enormous potential upside for you, the shareholder. Orin is one of the most aggressive exploration companies pursuing high-grade, scalable gold and copper deposits, and has a premier 7-project portfolio, including its 2 flagships, Committee Bay in the Arctic and Sombrero in Peru. Orin's unparalleled technical team and highly experienced management has a history of success in advancing and monetizing exploration assets. No wonder Orin's been called one of the best in the junior exploration sector. Orin trades on the TSX and the NYSE under AUG. To learn more, go to orinresources.com. That's AURYN resources.com.
The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. It's 3/20/19, the Fed's meeting, and you know what that means. The price of gold is destined to go down, at least temporarily. It's trading just under $1,300, down $650 so far. Let's see how long it takes to turn around. This time, we know it's going to happen. You've been watching it and watching it. Will this time really be any different? I wouldn't worry about it too much. Well, as always, if you got a different opinion or you think we're missing out on something, please write us. The email address, kl@kerrylutz.com. Well, someone who can shed light, perspective, and sanity upon the metals markets and other markets as well. I'm talking about Craig Hemke, a.k.a. Turd Ferguson. tfmetals.report.com is where you find him. Go over there, sign up for Craig's newsletter. It's must reading, and listen to his podcast too. Craig, welcome back. And so the Fed is in town, right? They're going to probably do nothing, but in that case, what better to show that you're really serious about controlling inflation than to knock down gold, right?
Yeah, this isn't anything unusual, Kerry. This is how the banks manage the price of gold, and they've been doing it now for decades. And anybody that follows these markets closely should not be surprised on a day where there's an FOMC meeting that's concluding, or on a day where the Fed chairman is up on Capitol Hill for Humphrey Hawkins' testimony, or even sometimes when everybody's focused on an employment report. Price usually gets right up to a certain level and then held there. In the hopes that, you'll violate some technical moving averages on the way down, that kind of thing, flush out the specs. What's different this time is that has already occurred. And so when we talk about where price is going from here, just to lay the groundwork for everybody listening, we had a pretty good idea that price was going to get smashed back from 1350 a month ago, because 1350 to 1360 is a real line in the sand. And I don't say that, just metaphorically and lightly. Anybody can look at a chart and see that it has been nearly 5 years since gold has closed above 1360 on a weekly basis. And there's a bunch of intra-week highs that all connect in a trend line. Any move above 1360 would signify a major breakout. So when we got to 1350 or so a month ago, with technical measures showing a pretty extreme overbought, you knew that we were going to get flushed out, and that's exactly what happened. Took price all the way down to 1285, where I began telling my subscribers that's where support should be. That's exactly where we bottomed. 2 weeks ago, we started talking about then a gradual, slow rally into today that would take price right up to the 50-day moving average, which is 1308. We've been over that level twice in the past 2 days. We even got there once last week. Every time we got there, we immediately got slammed backward, like we did again earlier today. We were at 1309 just a couple hours ago here on Wednesday morning. And now we're back to 1300. This is just all part of price management. I have no doubt what's going to happen later today. The Fed is not going to be hiking the Fed funds rate. To do so would invert the yield curve all the way out to 10 years. So that ain't going to happen. You're going to get a lot of talk and bluster and vague descriptions from Chairman Powell. But in the end, this economy is moving toward recession. The Fed is moving toward a reversal and rate cuts and even more QE to try to pump liquidity into the economy to keep it afloat, like they've been doing now for nearly a decade. And gold and silver are going to respond favorably as we go through the year. It's never straight up. People know that. But it's going to continue to be this 3 steps forward, 2 steps back until we do finally break out above 1360. And then we'll start seeing a more enthusiastic rush of momentum into gold and silver.
Interesting. So the more things change, in other words, the more they stay the same, the Fed just rearranges the players in the game, right?
Well, kind of, yeah. Here's the difference of this time, Kerry. They've been really since about 2013 or 14, they've been playing this, or maintaining, let's put it that way, maintaining a charade that everything's under control, that this was all part of their master plan, that they would do some QE, of trillions and trillions and trillions of dollars worth of QE. But then at some point, the economy would be strong enough that rates would go back to normal, whatever that is, and that their balance sheet would be reduced back to normal, whatever that is. And everybody bought it. I mean, you and I didn't buy it, but the 99.9% of the money managers and high net worth people and hedge funds and all that kind of stuff, they all bought it. And so they've maintained this charade really almost into late last year. I mean, even by November of last year, Goldman Sachs was still out there saying 3 or 4 more rate hikes this year. Like, what? That just wasn't going to happen. Now, you can look at the 30-year long bond carry, the longest, farthest point out on the yield curve. At 3%, that's exactly where it was for a yield that we had in December of 2015. Now, December 2015 is where Janet Yellen first started hiking rates. We went from basically 0 to 25 basis points. We're now at 225 basis points, 2.25% to 2.5% is the Fed funds rate. It's been hiked 9 times. And yet the long bond rate hasn't moved at all. Everybody was talking about, you're going to, burst the bond bubble and all this nonsense. No. All these trillions and trillions of euro, yen, and dollars keeps continually flowing around the planet seeking for a home. That's why rates are never going to go to 6% or whatever garbage that, that people put out there. And it's also why, because the long end hasn't moved up, that the Fed can't raise rates any further. And with the economy slowing, the discussion is going to turn to cuts. And when that happens, Kerry, we are right back into a situation like 2010, where the Fed had convinced the world that the one time they did QE in 2009 was a one-off. It was the only time they're going to have to do it. There were green shoots everywhere. The economy was soaring back from the financial crisis. But by November 2010, they had to start QE2. Everybody went, wait a second, you really don't know what you're doing. Yeah. The dollar fell, the precious metals soared. And that's where we're headed now. People are going to look by later this year and go, wait a second, there's no normalization. This is normal now. And that loss of confidence in the Fed and everything else is what will trickle through into a eventual rush, like I said, of momentum into gold and silver in all their forms.
Mm-hmm. And so they must know deep in their heart of hearts that this is all futility. Are they thinking that something is going to happen to take them off the hook? Or is it just kicking the can down the road as far as they can?
I think they're just kicking it, Kerry. I don't think the Fed gives a damn about anything other than their banks, first and foremost. The banks that they serve, the banks that own them. Their needs and desires are primary issue number one. And the banks are now tied to the stock market, just as state pension funds are tied to the stock market, just like everybody's retirement account is tied to the stock market. And so primary goal number one for the Fed is to keep the stock market afloat, which is why it's gone at a 45-degree angle, for the last 10 years. And any minor correction, you get the plunge protection team called in on Christmas Eve, right? Yeah. So the Fed is going to do anything they can. And you're already seeing this with the ECB. The ECB tried to play this game about, now we're going to start to, normalize our balance sheet and raise rates and all that crap. But they've already raised the white flag 2 weeks ago, and they're restarting QE. The Japanese have never even put up the illusion of trying to stop what they do. And the Fed's going to go that way too, if anything, because the U.S. stock market valuation is greater than the entire U.S. economic output at this point. And if the stock market were allowed to correct and fall by 25 or 50% like it did in 2001 and in 2008, oh my gosh, all hell would break loose. And so I think everything else be damned. Their credibility, their whatever. I don't think anybody even cares about that. You watch CNBC or Bloomberg, they don't give a damn about the Fed's credibility. As long as the stock market's going up, everything's fine. And that's what the Fed's going to try to do. Damn the torpedoes.
So just keep it going and don't worry about anything else, huh?
Right. And again, like I said, the key here then is the loss of confidence. That's exactly what we saw in 2010, late 2010. The curtain was pulled back and everybody saw that Bernanke was just this little man behind the curtain pulling the levers like the Wizard of Oz, right? And that caused a dollar to puke. And that's when gold then went from, it began 2010 at 1040. And by September of 2011, it was 1920. It was late in 2010. Silver had gone sideways for the majority of the year, but it was in late 2010 that it began to move up from 18 to 48. And it was that loss of confidence that sparked it. And again, that's where we're headed. Then you throw on the political stuff, Kerry. Right now, we're already up against this, this illusionary debt ceiling nonsense, but we're up against it. And the government is, they're trying to, Mnuchin's out there moving money around to try to keep the government afloat. But this has to be negotiated sometime in about the next 60 days or, or we talk about default and all that stuff. You think Nancy Pelosi and Chuck Schumer, after what happened, with the shutdown and basically winning that fight a month ago, do you think they're going to be willing to deal with Trump? Or are they going to lay him, on the cross of a mini default? They'd love to do that, right? And they're not going to give any political victory. So this is coming later on, in the next 30 or 60 days, too. All of this stuff, this uncertainty, political uncertainty, all that stuff creates an environment where, people want physical gold. But more importantly, people want gold in all of its forms. The derivatives of the futures contracts, the GLD, the mining shares, all that kind of stuff. And once you get the key level to watch is at 1360, that's going to indicate a breakout to really anybody. You don't have to have a degree in technical analysis to see that. And then that's when I think things start to get pretty interesting.
Yeah. So we're just putting off the inevitable effectively, right?
Yeah, I suppose from a monetary standpoint, that's what they're trying to do. Yeah. And hey, they've been pretty good at it, right? No one's called them the carpet. There's video out. I mean, people can go back and look. Bernanke is testifying in one of those Humphrey Hawkins testimony. And I think it was Ron Paul that asked him about the QE and where it went. And it was like, did it go to foreign banks? And he just goes, yeah, trillions of dollars. Do you have any record of this? No. None that you can see.
Nothing to see here. Move along.
Right. None that we're going to show you. And so, again, as long as the stock market, there's too many media interests and too many public interests that have an interest in having the stock market go up. So nobody's going to stop and question it. It's like the stock market keeps going, and they keep saying, well, yes, this is really, well, if the reason, the primary driver of the stock market going higher is all these buybacks. That these corporations are using their own cash to buy back their shares. Here's the thing. If you buy back the shares and take them out of the general float and remove them from the amount of shares that are out there for people to buy, then if demand stays the same but supply is down, price goes up. Not only that, when we talk about PE ratios, we're talking about price of the stock versus earnings. Well, what are earnings? Earnings are a fraction, earnings per share. And so if you remove shares, your earnings per share go up too. Of
course.
And so that's, look at how fundamentally strong this is. S&P earnings are up. I saw a thing last week said that S&P earnings are up 300% in the last decade. But somebody did all the math and took out all of the major share buybacks. Actual earnings are only up 30%.
Which still isn't bad, but it's not 300.
Over a decade.
It's a tenth.
That's 1% a year, 2% a year. But what people find out are up 300%. Well, why is that? In large part, it's because all these corporations taking shareholder money and rather than distributing it back to the shareholders or putting into R&D or hiring more employees and building more plants, they just simply buy back their own stock. So again, nobody calls anybody to the carpet on this because look at the stock market's going up, and too many people have a vested interest in seeing that continue.
Yeah, it's effectively just financial alchemy. The operations of the company are really not strengthening. They're staying even when you factor in the stated rate of inflation, right? And then when you look at all the debt the companies have taken on, look, IBM's a perfect example. It's had virtually no top line growth for a decade, but their per share earnings have been through the roof because they bought back so many shares. But the fact of the matter is their performance has been subpar at best, but it's disguised because, once upon a time you looked at total company earnings and then you looked at earnings per share, but they've dispensed with that nicety. And now it's just how many bucks a share did we make? And that just doesn't work. I mean, it's just untrue.
Yeah. Or you just look at revenue. You look at these companies that don't even have earnings. Look at the long list of companies on the NASDAQ that don't earn money at all, but they have revenue. And so, what's the revenue per share? Well, wait a second. What does that matter? If you're not making money, you're going out of business.
You're turning over dollars. If you're breaking even, you're just turning over dollars. And eventually you will collapse because you have to make money. And your earnings need to keep going up, or at least at some kind of sustainable rate. They don't have to go up astronomically. All they got to do is go up 5% a year, and your company's going to do pretty well, unless there's other competitors that are growing at 3 times the rate. But even then, you're going to do better. Craig, what about the sorry state of municipal finance? I know you've seen the article of the 75 largest cities in the United States. 63 of them are basically bust. When is that going to come home to roost? Plus, we've got states that are ready to hit the crapper, as it were.
And a large part of that, Kerry, too. I don't want to blame it on the entire situation on this. But a large part of both city and state problems are the retirement plans, the defined benefit retirement plans, the pension plans that were been negotiated by the public employee unions and everything else. And the states have offered these, plans to the employees, and the state governments and local governments all grow like crazy. And then the plans get underfunded, and then the assets in the plan don't grow fast enough. And then they become just kind of like a Ponzi scheme, like Social Security. Yeah. Where they're taking current inputs into the plan from current state employees and using that to pay out benefits to current retirees. The thing doesn't work. But again, this is all part of the Fed knows this. As much as we ridicule them and understand, what their motives are, there's not like they're just a bunch of dopes sitting around all day watching ESPN and flipping cards into a hat. They know what's going on.
You sure?
And so they see this and they realize, these state pension plans are already trying to project, 7% growth into their growth models to make them look like they're sustainable and that they're going to work into the future. Well, you can't get 7% when, the Fed has already driven interest rates down to 2%.
Yeah, well, here's an idea for them. If they need a higher return, they should all just go into the payday lending business, because they can make a couple 100% on their money. And so what if the employee, they just need to loan it to the employees who are broke instead of using the credit unions, which charge a reasonable rate of interest lower than commercial banks. Let's just put them all on payday loans.
Right. Hey, states are already running lotteries. They're all rushing to legalize marijuana and sports betting. Yeah. Why the hell not run the state-run pawn shop on top of it? I like it. Yeah,
I like it. And they do have one effectively. It's called the rules of escheatment. And if you your safe deposit box or your bank account go dormant in New York, it's like 18 months. But in other states, it's like 3 years. If you don't cash a dividend check, the state of California will just grab your shares and sell them off. And they did it to a guy who had a large Intel holding, and they didn't properly notify him, and the scheme was ruled unconstitutional by a federal judge as just a straight out-and-out taking, which it is.
Yeah, it's also called eminent domain, right?
Yeah. Well, it's effectively
all those things are out there.
It goes back to the king's prerogative, where basically people didn't have personal property fortunes back in the Middle Ages. You owned, if you were lucky, you owned a plot of land, but if you died, or you abandoned that plot and didn't do anything with it, then it escheated back to the king, who could then sell it off. And what a great scam. You could keep selling the same thing over and over again if you got dumb buyers who you don't protect yourselves from the state. And we think this is a wonderful policy, and we should be encouraging it in the country, and it happens at state and federal level too. There are federal escheatments that nobody even knows about. So the government's become a whole kleptocracy just to steal enough money to keep the whole thing afloat. What about the debt jubilee here? I know it would destroy all the banks and be done with them, but isn't this about the only alternative that we really have in the long run, Craig?
Well, there you touched upon it. That's one part. It would destroy the banks. Why is that? Because the banks are largely the creditors, right? This is the problem I have with the debt jubilee idea, and why I don't think it's realistic. It sounds good, especially if you are a debtor, right? To just walk away from your debt. That happens on, smaller levels, people, personally, and businesses go out of business and all that kind of stuff as well. But here's the problem. In the current system, debt is considered an asset, right? The dollar bill is an instrument of debt. But anyway, your debt is an asset on somebody's balance sheet. So it is a debt for you. It's on that side of the ledger for you, but on the bank side or anybody else's side, it's a credit. Okay. It's like if I loan you $1,000, Carrie, at 10%, and you pay me $100 a couple times, and then just walk away, I'm not getting back, the $1,000. It's just gone. Yeah. And so the debt jubilee assumes that the creditors are going to be okay with that.
I'm okay with it. Let's just do it.
Yeah, you're fine with it, right?
Hey, screw them.
But this idea of just wiping the slate clean is extraordinarily deflationary because those assets have just disappeared. And that would be, it would probably have to come with some reset. But again, like I said, I don't think the creditors go for that. It's like, what does China still own of U.S. treasuries? Let's just call it $1 trillion worth. Okay. Well, they expect, that they're going to get their $1 trillion for that. So, the principle of those treasuries, if the U.S. were just to say, hey, fondue, we're just sorry. Well, the Chinese aren't going to go, okay.
Yeah, well, that will be the end of the U.S. dollar as we know it.
But yeah,
so
that's not a good example because, of course, the U.S. can just print $1 trillion and pay off the Chinese. But from a private creditor to a private debtor, it just doesn't work that way. So, I mean, I always see this stuff about debt jubilee, and people that talk about it are way smarter than I am. So I'm not going to presume to think that what I'm saying is correct, but as I look at it, I just don't see how it works. At least certainly doesn't work peacefully.
I agree, but when you get down to it, there might not be a choice. Bankruptcy and a jubilee are really one and the same. It's just that the jubilee is administered by a bankruptcy court. There's just too much debt. It's unsustainable. But one other thing, it will also destroy the currency because every dollar that exists has been borrowed into existence. We could go through this. We've been through it many times.
Exactly. Which at the end of the day, Kerry, I mean, we began this conversation talking about gold and the banks and smashing it down from the 50-day moving average and all this other stuff. It's just noise.
Yeah.
I mean, it's frustrating as hell, right?
Yep.
And I'm in this to try to change the pricing system because it's so radically unfair and fraudulent the way that we price precious metal. And so I'm in it for that kind of long game.
Same here.
But this day-to-day stuff, it doesn't matter.
It's a distraction.
Exactly. And if anybody listening to us doesn't sit there and go, let's see, all these other creditor nations like the Chinese and the Russians and the like, they're all taking some of their dollars that they hold in reserve and converting it to gold. Maybe I should take some of my dollars that I hold in reserve in savings account and mutual funds and stuff, and I should convert some of it to gold too.
You think?
That's what people need to be doing because in that long game, that's one of the few winning moves that I can foresee for people.
Yes, I couldn't agree with you more. Hey, you got to take a look at Craig's site. If you haven't already, I urge you to do it. It will be well worth your while. tfmetalsreport.com. Sign up for his newsletter. Check out the weekly podcasts. Sign up for our newsletter too while you're at it. financialsurvivalnetwork.com. We got really good articles, good things coming out in the pipeline that will help you to navigate these somewhat rough and turbulent times. And anything you heard in the show that you want to talk about, kl@kerrylutz.com is the email address, Twitter feed @KerryLutz, Facebook page, Financial Survival Network. Craig, always a pleasure having you on. Thank you so much.
All the best, Kerry.
The Financial Survival Network. It's all about what's next.
Today's show is brought to you by U.S. Gold Corp. U.S. Gold Corp is a U.S.-focused gold exploration and development company advancing high-potential projects in Wyoming and Nevada. U.S. Gold Corp has consolidated a district on Nevada's productive Cortex trend and is advancing the Copper King project towards production in Wyoming, led by a team of prolific company builders and renowned explorers, including Dave Mathewson, who is directly responsible for several major Nevada gold discoveries. U.S. Gold Corp is well-capitalized and has an extremely tight share structure with less than 20 million shares outstanding and trades on the NASDAQ, a major exchange under the ticker symbol USAU. To learn more, go to usgoldcorp.gold. That's usgoldcorp.gold.
The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. It's 3/19/19. Well, right now, gold up $3.50 the ounce, right around to that 1307 mark. Silver up 4 cents the ounce. That's down from earlier this morning, but let's not forget, it's gone back to its old pattern of knocking down the price of metals right before the close of COMEX, which is 135. So maybe there's something to that. I won't aver, but person you're about to hear from has issues with gold. You should consider them and act accordingly, and always research your decisions and do your own due diligence. So Buck Joffrey, you're back with us, former physician who discovered the world of real estate investing and has never looked back. And by the way, if you got a question for Buck or myself, email is kl@kerrylutz.com. So Buck, welcome. So you have a preference of real estate over gold, and that's causing some controversy. Where is it coming from?
Well, there's inner turmoil. I've always been, in this real asset world. And so for me to sort of come out of the proverbial closet and say I'm not buying or even owning gold anymore is kind of a big step for me. And I know it's going to make me, a target.
I don't know. Maybe you flatter yourself a little too much, but certainly it is controversial. I'll go with you there.
Yeah, no, I think it's controversial. And I think it's not that I don't like gold. I think gold is money, right? And I think gold is money. I think it's been money for thousands of years. But looking at it from the standpoint of, as an investment, I have focused primarily on real estate, obviously, and I've always in the past have held gold. But for me, the value I'm starting to see, in my opinion, is that I don't see a lot of value in accumulating gold, particularly real precious metals, for a few reasons. I think really, the reason that I personally believed in holding gold and having that was that I've always considered gold the anti-dollar, right? I mean, the dollar, when the dollar gets weak, the gold gets stronger. Or if you could just say gold is real money, and the dollar seems to always get weaker against gold over a period of time, right? Because it's losing value. I think you could say the same thing for real estate. I think you can say the same thing for multifamily real estate in particular, which is my area. I think that generally speaking, that if you look at larger, say, multifamily assets, which is what my equity group is primarily interested in, foreign money comes in from China, et cetera, and they take down a $25-30 million asset. They might not even leverage. What are they doing? Well, they're just getting their money offshore and putting it into a gigantic piece of gold that throws, some cash flow off. And so that's really my change in perspective.
All right. So here's a couple of questions for you. So you think that the dollar is going to remain stable and gold will underperform it, if you will, or is that what your thinking is?
No, I don't think that. And in fact, I don't think that this is not a reflecting of how I think gold will perform per se. I think what my point is that, if I have money to invest, I want to invest that money personally, preferentially into an asset that I can leverage, that I can potentially get cash flow, and that seems to behave similarly to gold in that, real estate gains value against the dollar. So I think gold, I'm sure gold, I don't consider myself an expert in the value of gold. I do think gold prices are pretty suppressed right now. And so there may be some value in it. But for me personally, I don't see as much utility in spending a lot of money in gold as opposed to accumulating more real estate.
Mm-hmm. So let's give a couple of scenarios how real estate's going to play out, how gold's going to play out. Let's say this dreaded international reset really happens. I'm not saying that it will. And you wake up one Monday morning to hear the fact that all the currencies have been realigned and have been reevaluated in accordance with gold. This is the Jim Rickard scenario. What do you think is going to play out better in that situation, gold or real estate?
Well, I think you bring up an interesting point, but I also don't think that I've had Jim Rickards on my podcast several times. I think the idea that we're going to go back to a gold standard, I think there's going to be a lot of pushback against that globally. And if that were to happen, yeah, I'm sure gold would probably outperform real estate. But that said, remember that in owning real estate, it's not you're owning something that's fiat, right? It retains a value. And as long as whatever you denominate that value in, I think the price of real estate will rise accordingly. So to me, in that regard, if you're looking at this as a Jim Rickards type play, ironically, that's a more speculative play. To believe that gold is all of a sudden we're going to go back to a gold standard. I think much more likely we'll go to some sort of standard drawing rights SDR standard, which will be a basket of currencies. I think that the global economy and the countries around the world are much more likely to accept that than a gold standard again.
Well, I'm not saying a gold standard. That's not what I meant to imply. Just that they revalue their currencies in accordance with gold, but not so much being on a gold standard. I think that's never going to happen. But under an event like that, the price of gold is sure to escalate. All I'm saying is that gold has properties. It's been a safe haven investment for 5,000 or more years. And well, you can make a case that things have changed to have a certain portion, 5-10% of your portfolio invested in precious metals. Probably not such a bad thing. Not saying put everything in.
5-10%, but again, if I'm looking at gold that way, I'm looking at it as money. I'm not really looking at it as an investment.
Yeah,
right?
An insurance policy.
Right.
Quite plain and simple.
And to the extent that, then the question comes in my mind, and perhaps you can tell me this, is that if that were the case, would you be better off owning real physical metal, or do you think the GLD ETF would implode with some kind of global reset at the same time?
It's got weaknesses, GLD, and that is that you don't know who's holding the gold and how much of it and where it is, and even if it exists or not, you really have no idea because of those inherent weaknesses that exploit the reporting requirements of the SEC rules and laws. You don't know. And the same with SLV. Certain other vehicles, you do know. One was the I can't remember the name of it right now, but Sprott took it over, CEF, Consolidated Fund of Canada. So that, they do have it, as certain as you could be. I mean, look, if everything goes to hell in a handbasket, financial collapse, probably gold might not do you much good. But in terms of real economic volatility, uncertainty, one thing that's never going to happen is your gold is never going to get burned down. It might get stolen. You're never going to have tenants go on a rent strike or tenants who can't afford to pay you because everything's been revalued. Now, that's not an argument against real estate by any stretch. It's just illustrative of a need to have an insurance policy for those times when who the heck knows what's going to happen. Buck, do you think people in Venezuela 20 years ago thought they would be eating out of garbage trucks now? If you go back and ask them? No.
Well, they can't exactly leave Venezuela with a bucket of gold either.
Yeah, but there's a vibrant black market in cryptocurrencies and precious metals and anything of value, any physical item of value for barter. It's kind of a reversionary interest, reversion back to an earlier time. That's what happens when monetary systems break down. I'm not saying it's going to happen in the U.S. All I'm saying is, look, if you knew in 5 years, Buck, you were going to have a heart attack and die, and right now is undiagnosable, would you go buy an insurance policy? I would venture to say yes.
I think your point is well taken, and I certainly, again, don't argue that that owning gold is foolish, and that in the amounts that you're talking about, 5-10%. I mean, people hold that much in terms of money in general, right? But what I'm talking about is, people who are really gold heavy, people who are investing 30-40% into gold. Now, hey, listen, by all means, go ahead and do it. But personal philosophy for me, first of all, I have to tell you that I do not believe that we have a zombie apocalypse coming. And I'm not in that, I don't believe that. I think that, maybe in a decade or so, when some of the demographic issues really come together. But I think we've got a good 10 years of a strong economy. And so to the extent that I think that, the zombie apocalypse is not coming, I don't see a lot of value in being gold heavy right now. And to the extent of actually utility. Now, listen, I actually have, a monster box, right? I think silver and being able to use some coins and stuff like that would have a lot more volatility in a zombie apocalypse than, big chunk of gold. And to me, as an investor, I have to look at a lot of things. I look at if I don't believe that something's going to happen the world is going to collapse kind of feeling, that the majority of my money has to go towards what I believe is useful in building wealth. And for me, what's problematic with gold is that it doesn't throw off any cash flow. It doesn't allow me to improve it. We can argue about liquidity. I don't believe there is as much liquidity. If you do it properly and you follow the rules, you're gonna have punitive taxes, whereas I pay basically no taxes and make seven figures. I think that it's hard to borrow against it. There's lots of things for me as the way that I've created my own wealth that gold doesn't really allow me to do.
Well, let me ask you a question, Buck. Did you see the crash of 08, 09 coming?
No, of course I didn't. But let me tell you this. In 2008, 2009, my father's in real estate. That was he made more money in 2008, 2009 than he ever did.
Yeah.
And my real estate friends who, like Robert Kiyosaki, Ken McElroy, all of them will tell you the same thing.
Well, but the point is, all right, nobody saw it coming. I happen to have, and wasn't doing what I'm doing now. Otherwise, I would have really cleaned up on it. Had no idea how to play mortgage-backed securities and sell them short. But if I'd known that, I would have done it, had the money. But the point is that there are these unforeseeable events that seem very obvious when you look back. But when you're looking forward, it's like, hey, there's a hurricane forming off the coast of Africa. And is it going to hit Florida? I don't know. But I do know that hurricane's forming. And I do know that governments have been extremely irresponsible and profligate in their spending and are raising prodigious amounts of debt. It seems to be the only thing we produce anymore in the U.S. is treasuries. And I know that history has told me these trends are unsustainable. I'm also looking at states going bankrupt, like New Jersey, like Illinois, like several other that are going to require a federal bailout because I don't believe the feds will let them go bankrupt. But all of this is on the horizon, and it's very clear that it's coming. Pensions going bust, everything else. So I
guess I don't want to understand the argument as it relates to the value of real estate. I mean, if anything, I'm looking at that and saying what you're talking about is the inevitability of inflation and devaluation of the dollar, which I agree with.
Something 100%. Like something that we can't even conceive of is what I'm talking about. And I don't think real estate will protect you against that. And I think the odds get higher each day that some kind of major event of dealing with his debt is going to have to take place. And therefore, in times of uncertainty, there's only one investment that has ever worked, that has ever been effective. And you go back to Reichmark, the pre-collapse of Germany prior to World War II. You go back to all of these hyperinflations that we've seen. And I'm not predicting a hyperinflation. I'm just predicting an event.
You and me are on completely different pages, because I don't believe that we are in a situation in our current economy in the United States to call it Venezuela or to suggest that it has anything to do with
so Buck,
Germany.
Buck,
I mean, this is not
Buck. What's going to happen? What's going to happen? Well, let me ask you, what's going to happen when Illinois finally goes bankrupt, when they can't pay their debts anymore?
Well, I think there will be bailouts.
What's going to happen? Yeah, you think the Fed's just going to write a check? There's going to be blood in the streets. What happens when Chicago goes bust? It's going to go bust. There's no question about it. Just like Detroit, unlike states, cities can go bankrupt. What happens when New York City goes bankrupt? What happens when California goes? All of this is going to happen.
I've been hearing, people, honestly, I've been hearing this for 10 years now, right? I've been hearing
the situation has gotten worse.
And I've heard this from the last 3 or 4 years. In the meantime, I've made hundreds of % on my money, right?
I'm happy for you. And I'm not saying you shouldn't be in real estate.
What happened with, and I'm not saying you shouldn't buy gold. I'm telling you why I'm not interested in being over heavy in gold. But
we agree. We agree.
So to the extent that you're talking about all the issues that there are in the economy, we don't disagree. But I think where we disagree is, how do you play that, right?
Yeah, well,
how do you play that?
You have to keep doing what you're doing now if it's working, obviously, but to have an insurance policy, and that's strictly how I view precious metals, as an insurance policy is always a good idea. So we can move on to the next topic here. We'll agree to disagree on the rest. So when it comes to real estate, what do you put your money into, and how does Joe Sixpack make this work?
Well, unfortunately, I don't really work with Joe Sixpack. Generally, most of my group is in the accredited investor world.
So Joe McCallan's 18-year-old Scotch. What does Joe McCallan do?
Joe McCallan. So basically what we're doing right now is, we're focusing on, we're still buying property below the value of construction. We closed on a $25 million asset in Houston that would have cost us, probably about 30% more to build it. Mm-hmm. And we're doing major value add capital expenditure type plays on these. We're taking sub-institutional assets and selling them to institutions at a premium. And so it's worked for us repeatedly. And we're doing this, obviously we don't have one investor, although we do have some family offices, et cetera, that get involved with, $10 million at a time. But we've got people who are coming in at, $50,000 or $25,000 at a time.
Selling units. Okay. So you're selling units. It's a private placement. What's it filed under? What section? Reg A or D?
Typically Reg D. They're also typically Reg D 506B. Mm-hmm. They're part of my my equity group. That's primarily listeners of my podcast who generally are interested in potentially getting involved. They go through a little process of the usual qualifications of being qualified as an accredited investor. So,
yeah. All right. So Joe McCallan has a chance. Joe Sixpack is going to have to become Joe Threepack then, huh?
Well, at least, that's the reality. I don't pretend to be the one to, if you don't meet the criteria of an accredited investor, which is, most of my audience is, which is, $200,000 per year or $300,000 per year for filing jointly, or $1 million of net worth outside of your primary residence. That's what an accredited investor is. And if you don't meet those criteria, typically, I'm not trying to create, a show where I talk to everybody, because that's not, I'm just talking about what I believe in and what I do on a daily basis. So, so that's what
better to talk to people with money, because people without money aren't going to do anything for you.
There may be some truth to that, but I started this show, before I was aggregating funds. And, when listen, my background is, I'm not a rags to riches guy. I mean, I just, I grew up in an upper middle class, home where my dad's a real estate investor. And, I went to medical school. I was a surgeon, so I don't know, it would be disingenuous of me to try to pretend that I'm talking to others. So, I mean, you can call it what you wish to call it, but that's okay. The reason.
Hey, that's totally reasonable. And it's good business. Let's face it. So one good thing, though, about being a surgeon is when the zombie apocalypse occurs, your services will definitely be in demand. No question about it. So you're covered either way. You don't need to worry about it.
Malpractice insurance going up.
I don't think in the zombie apocalypse you're going to have to worry about malpractice.
Zombies can become vampires in those situations, just like the rest.
Just like the legal profession now, for sure. Hey, so Buck, when you're not like out there making tons of money, what do you do for fun in your life?
I don't have any fun, Kerry. I never have any fun. No, I have little kids. I live a normal life. I take them to birthday parties. I just do dad stuff. I'm just a dad, really. I don't really talk I don't talk business around, my neighbors and friends, etc. It's just
good.
Yeah.
That's good. No one wants to hear how much money you have anyway. It's a bad taste.
Well, where I live, I'm probably the poorest guy around. So,
all right. So that's good to know. And but to Joe Sixpack, have a little compassion for him. What should Joe Sixpack be doing here?
Well, listen, I don't think it's, at the end of the day, I am a Robert Kiyosaki devotee, although Robert probably, if you heard me talking about gold, would never talk to me again. But the truth of the matter is, I do listen. I'm the son of immigrants who came in the late 60s with no money. My dad was buying single family homes and duplexes, and slowly worked himself up and did the American dream. To the extent that I believe that he, you wonder why I believe in real estate. Right. I mean, it created, my dad worked at a post office and went to school when he first got here. Now in 50 years or, 50 years later, has been extremely successful. So yeah, I mean, I think it doesn't matter if you're Joe Sixpack or if you're an accredited investor. I think to me, the value of real estate is real. It is proven. You've talked about gold being around for thousands of years. Well, so has real estate. I mean, people have owned land and rented land out, and landowners and
of course
that it's not new. Right. So these things are in the same bucket. And at the end of the day, you could participate in things the way I'm talking about. But to this day, my dad buys, low income housing. That's what he's interested in. Really? And it's not very expensive. And if you're Joe Sixpack and you're willing to do some of the work, you could do it.
Yeah, I like it. And I agree. I've seen people make a lot of money since the last crash here in Florida, especially. Any markets you're looking at, particularly hot markets, any markets to stay away from?
Markets I like are, my favorites are still Phoenix, Scottsdale. I think Houston, particularly in areas that are not, in the flood zones, Houston is remarkably hot. Few people know this, but it seems like if you look at U-Haul statistics, it's this behind Sacramento and Roseville corridor, which is in Northern California, which I would not invest in. It has got the highest influx of population. It's it's got 20 Fortune 500 headquartered places, headquarters there. Its population growth is expected to double in the next 3 decades. So I think that's underrated. I like Dallas, although Dallas is, still one of those places that has a lot to grow. It has been hot for a long time. I also like Atlanta. So yeah, I mean, those are things that I like. I generally like to stay away from natural disasters as much as possible. So I'm not in the Southeast like a lot of people are interested in being in. So.
Yeah, well, natural disasters aren't what they used to be anyway. Now the government just writes one big check and everybody's happy. And Like I've been through 2 hurricanes here in Florida. The last one was a bad one. And the amount in the newer properties, amount of damage you have, minimal. Yeah, if we get that hurricane 180 mile an hour Cat 5, all bets are off. But, like you playing the percentages and playing history, we just haven't ever seen one of those. Now, the house I'm in could easily sustain a Cat 4 hurricane with very minimal damage. A little bit of roof damage, perhaps, but that's it. The garage doors are like reinforced. It would take a tank to break it down. And we got this impact glass that sustains 180 mile an hour impacts. And basically, the thing's concrete block. So not a lot to go wrong. Hey, people want to find out more about you, your podcast. Where do we go?
Yeah, go to Wealth Formula Podcast, usual places. It's also wealthformula.com. Just the usual. I'm on YouTube, iTunes, Stitcher, pretty much probably wherever you are.
Yeah, probably. I think I'm on all of those and lots more. But hey, it's a interesting world out there, Buck. We're really thrilled to have you back on. It's been great speaking with you. Questions for Buck about this gold versus real estate? I don't really view them as mutually exclusive.
It's just, it's for me, it's putting them in their boxes or baskets for me. So.
I gotcha. And so just email us, kl@kerrylutz.com, Twitter feed @KerryLutz, Facebook, Financial Survival Network. Buck, appreciate you coming on. We'll talk to you again soon.
Thanks, Kerry.
The Financial Survival Network. It's all about what's next.
Today's show is brought to you by U.S. Gold Corp. U.S. Gold Corp is a U.S.-focused gold exploration and development company advancing high-potential projects in Wyoming and Nevada. U.S. Gold Corp has consolidated a district on Nevada's productive Cortex trend and is advancing the Copper King project towards production in Wyoming, led by a team of prolific company builders and renowned explorers, including Dave Mathewson, who is directly responsible for several major Nevada gold discoveries. U.S. Gold Corp is well-capitalized and has an extremely tight share structure with less than 20 million shares outstanding and trades on the NASDAQ, a major exchange, under the ticker symbol USAU. To learn more, go to usgoldcorp.gold. That's usgoldcorp.gold.
The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. It's 3/19/19. Make of that what you please, all you numerological oriented folks out there. As always, email us with your thoughts. If there's a darker meaning to 3/19/19, please, kl@kerrylutz.com. Well, David Horowitz is back with us today. His latest book, Dark Agenda, The Roar. Well, you tell us the name, David.
The War to Destroy Christian America.
The War to Destroy.
Yeah, I mean, it's all in the news today. I mean, the Democrats are going after every pillar of the constitutional arrangement, aren't they? The Electoral College, the Supreme Court. Don't want to do away with the Senate, and on and on.
Yeah.
No borders.
Well, what do you need borders for, right? We don't have a border crisis, do we?
Oh, no, of course not.
No, it's your imagination. Right. I mean, how could you think we don't have a border crisis? Would you explain that to me? Because I just don't understand that one.
Well, it's just brown people who the white supremacists don't want to let in, that's all.
Is that what it is?
The thing, I can get to the heart of my book. Because, as you know, I come from the left.
Yeah.
So I understand it well. And what we have here is the Pelagian heresy. Progressives are followers of the worst ideology in the history of mankind, which is Pelagianism.
Yeah.
And what is that? It's the belief, Pelagius was a 4th century monk who believed that sin was contrary to human nature. It was against human nature. And that therefore people's true nature was good. And the world made them bad. And Pelagius believed that if Christians were true to their human nature, which was good, and therefore were good Christians, they could bring about the kingdom of heaven on earth. which is exactly what progressives believe. They believe people are born good, society makes them bad. They never make the connection between the people who inhabit societies and create them. Society just reflects who we are. And then if you're politically correct, if you're true to your good human nature and not corrupted by capitalism and evils like private property, if you're true to your human nature and good, we can have paradise on earth, which is communism, socialism, social justice. They're all the same thing.
Yeah.
And that's why they killed 100 million people in the last 100 years, because people are not politically correct. Sin is integral to human nature. The people who lead these movements are more prone to sinning. I mean, look, I mean, how many laws has Cortez broken already?
Oh, forget it.
They're corrupt. They think that they can create such a wonderful paradise that it justifies any crime, any atrocity. And that's why progressives have supported the murder of 100 million people in peacetime in the last 100 years. And they're racist, too. All this is in my book. The war against Christian America. Why do I call it Christian America? Because every principle and every value that we hold dear, equality, inclusion, diversity, pluralism, every last one of them is a Christian idea that originated with Christians. This country could only have been founded by actually Protestant Christians, because Protestant Christians were individualists. They believed they had a doctrine called the priesthood of all believers. Before the Protestant Reformation, you couldn't get to heaven if you didn't go through the Catholic Church. That's the only way you could get in, and it's priesthood. But the Protestants understood that the Catholic churches are human institutions. God doesn't run the churches, human beings do, and therefore they're prone to the same corruptions that human beings are so good at. And the priesthood of all believers, if you think about it for a second, the idea that everyone confronts their creator one-on-one without an intermediary of a state or a church or a priest, you see what a revolutionary idea that is of equality. And that's how we got where we are. But you can't teach that to kids in school because the atrocity known as the Supreme Court. There actually is a book by a liberal who calls it the most dangerous branch. I mean, whoever thought that you can have 9 lawyers appointed for life by politicians and it would come out good?
Yeah. How's that work? How's that working out for you?
Yeah, well, we had prayer in the schools for 170 years until 1962. And then they just said that it violated the Constitution, which it doesn't. The Constitution, separation of church and state, is that the state shall not create an official religion. The prayer that they wanted to ban from the schools and did successfully was non-denominational. It didn't establish any religion. But anyway, we've had now 50, 60 years of this onslaught from the anti-American, totalitarian, racist left. And, you know, we're pretty much on the brink of a dark ages if the people don't rally behind Trump. But I think they will.
You think so? So,
yeah,
you think
even this attack on the Electoral College, I mean, these idiots, they have no... They don't even give an argument. They don't even confront what the Electoral College was supposed to do. They just want to get rid of it. It's undemocratic, one man, one vote. Actually, the founders were against one man, one vote. That's why we have a Senate, where California, with 33 million people, has the same number of senators as Wyoming, with 500,000.
Exactly.
But they want to just wipe all this away. Now, the irony is that the Electoral College worked for the Democrats. They lost because they have horrible policies. And but, you know, just California, I forget how many electoral votes California and New York have, but it makes it very easy for them.
38 and 29.
To get the others if they try. The problem with Hillary was she didn't try.
Yeah.
Trump won the popular vote in 49 states. The only state he didn't win in is California, which has been run by communists for 20, 30 years and has the most illegal voters.
Sure.
I mean, I used to live in California. I escaped
Good move.
the Iron Curtain. But you walk into, I've walked into a polling booth. I said, "Don't you want to see my driver's license?" No.
Nothing.
I mean, they say, "Are you on the book?" "Oh, yeah, that's me." "You want to see any identity?" No. So Hillary won, you know, she got a 3 million plurality in California. It's also because Trump didn't campaign here because
why bother?
That was, why bother? It's the rules of the game. So the Democrats will screw themselves with this, but it's their contempt for America that's the subject really of my book. You know, just this idea of identity politics is racism. That's all it is.
Correct.
You judge people by the color of their skin, their gender, their sexual orientation.
Yeah, they project.
Whereas the founding is quite the opposite. The priesthood of all believers, that included slaves, that included blacks. And that's why America led the world in ending slavery. Americans can be very proud of what they did with slavery. They inherited a bad system. Americans did not go over to Africa and enslave blacks. They were already enslaved by other blacks and sold at auction. But within a little over a generation, from 1787 to 1865, which is what, 68 years, 78 years, something like that, at the cost of 350,000 Union lives, America abolished slavery, which still exists in Africa. There's no people that could be prouder of their history with slavery than Americans. And of course, I get crucified for saying things like that, but
it's historically true, right?
Yeah.
I mean, that is the truth, right?
That's the facts.
Yeah, that's the fact. So AOC, is she a total stooge and the dumbest woman in America, or
she's an idiot?
Yeah.
She is an idiot. Even though I've written at least 5 books about how bad our universities are, to produce somebody this stupid is quite a feat.
It's pretty astounding, isn't it?
But you know, she's got money and forces behind her.
Obviously.
There's a YouTube video by a Mr. Reagan, which goes over the people who created her. She was recruited because she was, an attractive candidate. She was not a politician. She was a bartender. Yeah. And it shows. She doesn't know what the hell she's talking about. But I have to say that's true of Cory Booker as well. I can name, the whole raft of these Democrats, Beto, O'Rourke.
Yeah. Dumb as a bag of hammers. Right? I mean,
come on. But, and the other ones are just liars, like Gillibrand.
I think that AOC would have problems pouring a shot of vodka straight up. I hope she was a better bartender than she is a Congress critter, because her stupidity is just legendary, and she doubles down on it constantly. They're always saying Trump's a liar, Trump misspeaks.
The definition of stupidity is you don't know that you're stupid.
Yeah, well,
and you repeat it.
So a wise person knows that they're not wise, right? It's kind of the way it works. Socrates said, "I am the wisest man in Athens because I know that I don't know." Well, clearly AOC doesn't have a clue that she doesn't know. And that's what makes her really scary.
No, look, only racists think she doesn't know.
Yeah.
That's it, defense.
Yeah, that's really it. So, again, just tell us the name of the book.
Dark Agenda, The War to Destroy Christian America. You can get it on Amazon. I'm going to be blacked out. There won't be any reviews in the liberal media, so.
Probably.
You can help me by just getting a sample copy
All right.
If you like it, you can buy it, but you could also recommend it to friends.
We will definitely purchase a copy, and I'll do a review. And David, as always, we wish you the best of luck. Where's the best place to find you?
Frontpagemag.com.
Frontpagemag.com.
And the book is available on Amazon.
And wherever fine books used to be sold, right?
No, I don't think so. The independent bookstores are leftist, and they don't they're totalitarian, so they don't want to hear another side.
Yeah, that's the thing. But they're so open-minded and tolerant. They preach tolerance, David. I don't understand this.
Yeah,
how can this be? All right. Hey, always great to have you on. We'll talk to you soon. Any questions, comments for David, myself, KL@KerryLutz.com, Twitter feed @KerryLutz, Facebook page, Financial Survival Network. David, good luck on the book.
All right. Thank you.
FSN Radio. It's all about what's next. Go to FinancialSurvivalNetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.